Hey guys, it's Cameron here with Emerson Property Management. Every week I bring you tools, tactics, strategies, lessons I've learned, things that have helped me build up a sizable portfolio in about 2 years. Now manage that portfolio. Guys, today I want to talk about a very important business principle that was highlighted in MJ DeMarco's book, Millionaire Fastlane. And one of the biggest principles is barrier to entry. So he talks about when there's high barriers to entry, and Warren Buffett has mentioned this before as well. So Warren Buffett talks about, he looks for businesses that have moats. And what he talks about with a moat is basically saying that his castle or whatever is inside that moat is protected. It's going to be really hard to get over the moat to create another business or to attack his castle. So why am I talking about this? What does it matter about barriers to entry? Well, I wanted to say this because a lot of barriers to entry have been lowered for real estate. So we have a market that has been unbelievably hot. Both stock market and the real estate market have both taken off over the past decade. So we have people who have some jingle in their pockets, right? People who are making money. One used to be money, right? That used to be a big constraint on real estate was, I don't have any money. Well, we all know, or at least if you guys have been watching this, that I started and I've done multiple deals with very little money involved. You can use other people's money. There's creative strategies. There's whole books written on this. And so that's kind of not one. And then for the people that do have a little bit money, well, now they're seeing their wealth grow. They've seen, household wealth has just grown dramatically over the past 10 years. So that's not as big of a barrier to entry. Understanding the market, that barrier to entry has been reduced. The markets that we're talking about, there's these demographic data and there's data on employment numbers. Employment numbers are really low. There's so many barriers that have been eliminated or lowered that everybody's piling into real estate. So when everybody's piling into real estate, we've got to take a step back and really look at this. Look at interest rates is another great example, right? I can't afford a mortgage. Well, if you can't afford a mortgage at 2% or 2.5%, you're gonna have a hell of a time affording it at 5 to 7%, 7% being the 50-year average interest rate for a mortgage. So that's even been lowered. So we're seeing this frenzy, and it makes so much sense on why prices are just out of sight right now. So I just want to make this and say, at the time of this recording, this is mid-May. We're on the tail end, or hopefully the tail end of the pandemic. Just be cognizant of what numbers you're running for your properties. I have several friends who are looking for deals. Maybe it's a personal home or an investment property, and things are just out of sight. So just, instead of maybe looking for at 100 deals to get one, you're probably looking at 150 or 200 deals to get one. So just stick to your numbers, understand that some of these barriers to entry have been lowered and that more people are piling in, which is great. It's going to create more opportunities down the road. There's going to be different types of opportunities. Just don't get caught up in the madness is what I'm getting at. Take your time, know your numbers. Some things just aren't going to work in this current environment. Rents, for example, have just not kept pace with housing prices. So it's hard to cash flow on properties right now. They're out there, they exist, don't get me wrong, but it's just a strategy where $300-400 a month in cash flow for a property that you could have bought in Katy doesn't even, that's just on the market or even off market wholesale deals are extremely hard to find. So in due time, barriers to entry will come up and we'll get to balance back in the market. Interest rates will come up, the market will crash, people will pull their money out of real estate, bond yields will come up. And what does that mean? That's just, people put their bonds, US Treasury bonds are extremely safe because they're backed by the US government. So when those interest rates are low, people look for other avenues to get a return on their money. One of those being real estate. So when bond prices go back up, you'll see more money flood back into that. And again, it's just having some sort of business sense. I don't know if you guys, I'm in the gym and I hear people talking about how they're a wholesaler or they're investing in real estate, they're buying property, and you hear from Uber drivers and everything, and just got to make yourself pause for a second and think, what's going on here? Same thing with Bitcoin right now, right? Everybody was a Bitcoin trader, then it crashed, then nobody was. Now everybody's a Bitcoin trader again. If you're curious on my my thoughts on cryptocurrency, then check out one of the links up above. But barrier to entry, guys, make sure you understand that when barriers to entry are high, that's what makes a great business. Barriers have been lowered recently. They will come back up, but they have been lowered. We're seeing a lot of people come in. Just stick to your numbers. Do not do anything. Do not get caught up in the herd mentality. There will still be deals next year and the year after that. I guarantee it. Okay, guys, I hope that was helpful. If it was, let me know. If it wasn't, let me know. Either way, I'll see y'all next week. Thank you.